It's Monday, April 12th. This is The Street Live. I'm Catherine Ross, and I am joined, as always, by Jim Cramer. Jim, we are seeing the markets a bit in the red, so what are you watching today?
Well, look, I think that we're all trying to figure out what Jay Powell's comments mean. And I look at the bond market, and the bond market is saying, Jay, we have much more inflation, and we're going to be really your boss, and we are going to tell you what to do. And I think that's quite wrong. That's why I think that today's going to actually end up being an okay day. Now, we had that huge move on Friday, but I just think that what's happened here is that we've got boom with temporal inflation. I know the numbers on Friday made it look like the inflation is real, but I want to be a buyer here. I think that there's a lot of situations that I think are really strong. I call attention to a Costco, to a Walmart. These are where you want to be.
And what do you make of this semiconductor summit that's going on at the White House today?
It's very important that our government step up and say, listen to the Taiwanese. We want chips. I know that our auto chips aren't that important to you, but they're really important to national security. They're really important to our business. They're really important to job security. And I think it's time that the Taiwanese started playing ball. I think that they spend too much time trying to cater to China and not enough time trying to cater to us. It is vital that they send chips to GM and Ford. We can't have people out of work or laid off because of GM and Ford's problems with a few chip companies. So that's my hope. I hope that President Biden lobbies for all the chip companies to come and make the chips that we need. It's time. And it can't be GM pleading, and it can't be Ford pleading. It's got to be the country pleading. And reminding them, by the way, that their security is all on us. We do everything. How about a return of the favor?
Jim, I want to take this opportunity to dive into this Microsoft deal that was announced this morning. Microsoft, yes, for those of you who are not aware, is buying Nuance Communications for a total deal of $19.7 billion. You have been saying that you liked this deal, and you actually sat down with Microsoft CEO Satya Nadella and Nuance CEO Mark Benjamin earlier this morning. Jim, let's just start off with what stands out to you in this deal.
First, Satya is brilliant because what we've all wanted, what everyone's wanted, is what Epic has. Epic's a private company. They have the data. They have the data that shows what's working and what's not. They also have your personal data. Now, you could argue, Satya told me, listen, it's not about personal data. It's about getting the doctors be able to spend far more time with patients, far less time doing paperwork. I think it's bigger than that. Ultimately, I think that it's going to be able to to control costs, to make it so that that somehow Medicare has better data, somehow that our insurance companies have better data. And we've always been beholden. I mean, I don't think people realize how powerful Epic is. Ms. Faulkner, who runs the company, has never wanted to sell. Epic and Cerner are a duopoly that controls almost everybody's data. It's time that the government, I felt, should have stepped in and get what they have. But Microsoft is going to do the same thing. It's actually better. Microsoft's better run. I think they can run a lot of the data through to Azure, and we will really know outcomes data for the first time. What I'm hoping ultimately is we'll know real-time data about what is happening in our bodies. That is, now Satya said that's not the point. And I think that would be privacy concerns, so I totally get it. You want the deal approved. But Nuance somehow was able to get both Cerner and Epic, those are the duopoly, to share their data and to do an artificial intelligence deal that is now really a windfall for Microsoft. If anything, they're buying this much too cheap. I really salute Satya really just is a visionary. What can I say? And he talked about this doubling their total addressable market. And that's because healthcare is the biggest non-digitized market. This is the way to digitize healthcare. I got to praise it. I got to praise it big. I really love this deal.
Well, and this is Microsoft's second biggest deal ever next to LinkedIn. Jim, I mean, I have to ask, though, do you think that we're going to see antitrust speculation? Do we think that, this is a huge tech company. We know that it's been under pressure alongside Google, Facebook, et cetera. Do you expect lawmakers to kind of raise their hackles around this?
What a great question. And I would tell you that somehow Microsoft has seen it. Somehow Microsoft is able to evade the kind of opprobrium that has been the case for FANG. And I think that it's going to keep that, what I regard as the halo. There'll be an investigation. I think it'll pass. The thing that they have to investigate is, is one company going to be too powerful in the healthcare system? And I think that the healthcare system needs it. I think that Microsoft can demonstrate that not a bad actor, be able to have the information from both Cerner and Epic. That's what it's going to turn on. And I think that because Microsoft is regarded as a good actor, the deal gets done.
Let's talk about the Jay Powell interview on 60 Minutes last night, because he said that we're seeing an inflection point in the economy, and also explained that the biggest risk that we're still facing is whether or not the virus spreads again. I mean, overall, this interview to me came off as very positive. And Jim, it kind of feeds into what you and I have been talking about with inflation, because you've been saying don't worry about inflation, and that was kind of my read from Jay Powell as well. Do you agree?
Yes, entirely, Catherine. I mean, I think what Jay Powell is saying is that the inflation is temporal. What he doesn't want to do is start raising rates. He really made a couple of fantastic points in that interview. One is that we're no longer we have to anticipate inflation. We have much better data. Two, inflation that we currently have is not the kind of thing that you need to worry about. I think that's bold. And then three, look, the guy's got a heart. And one of the things, we've always been worried about inflation, and we've always been worried about job growth. We've never been worried about components of job growth, particularly that minorities are not getting the jobs back. And he's not happy about that. And he really wants to change that. What a remarkable thing. I just think he is so in sync with the temper of the times. And I think it's fantastic. We have to start thinking about discrimination. The Federal Reserve has to worry about this. And he's doing it, and I salute him.
Now, for those of you who have not checked out Jim's Real Money column this morning, you need to. It's on realmoney.com. But based on that, Jim, you really focus on the Fed rate hikes and why the next time that we do get a hike, it's actually a buy. So obviously for a lot of investors, it's hard to keep themselves from selling when everyone else is, right? Like you just go with the masses at some points.
Right.
But why should they avoid that?
Okay, well, what I looked at is a couple of instances where actually, I looked at every instance that we've had in the last 20 years, and only one of them produced a sharp fall, and that's the 2015, 2016 that I've written about endlessly on Real Money. And that was because the Fed chief, I think, anticipated more inflation, and it didn't happen. Instead, we got a collapse in commodities. And I think that Jay learned from that. He knows he's not going to do that. And that's why I say you got to buy the weakness here, because the weakness here is associated with the idea that, look, the Fed's not going to be able to, they're not going to be able to hold things back. They're going to have to tighten. I completely disagree. I know that there's a big slate of bonds. I think the bonds will be gobbled up. And I think that declines like this have to be bought, given the fact that Fed rate hikes, and particularly the first rate hike, has not produced anything other than that one time that was disastrous. So look for situations like a Costco, like a Walmart, that I still think are buys, and put that money to work. And we'll talk about that on the Action Alerts video.
Yes, we will. But one stock that I'm wondering if you think is worth putting money to work in is Chipotle, which is your mad dash this morning, Jim.
Well, I've been saying since 300 that it's good. I've been saying it's going to go to an all-time high. It is about to do that. It is, I think, crashing through the all-time high. Let me double check. And that's because of new menus. It's the quesadilla. It's also because the digitization, which is so much better than everybody else, so much better. They're outside the store, takeout, delivery is extraordinary. And I really want to compliment the fact that they are literally making as much money outside the store as in. So what happens when in is open big? Well, what's going to happen is, there we are, all-time high. What's going to happen is it's going to keep climbing and climbing. It is a buy. I just think that Brian Nichols doing a remarkable job.
And just to lay it all out there for our investors watching, when you say buy because of indoors being opened up, you mean this as a reopening play as well, correct?
Very much so. I think that what's happened is 100,000 restaurants went under, and some Mexican, many different flavors, and Chipotle's been able to capitalize. Now, they don't talk about that. I mean, it's not something that anybody wants to say, which is that, hey, we are crushing everybody. But as I look at the stock, it's certainly indicating they're crushing everybody.
Jim, you tweeted earlier this morning, pay me in Bitcoin. And this comes as Bitcoin is front and center this week with Coinbase's IPO on Wednesday. So if investors want to get exposure to crypto without actually jumping into crypto just yet, is Coinbase, in your opinion, a way to do that?
All right. Well, Coinbase is going to come as a direct listing. And almost all the direct listings have succeeded. But this is a huge deal. It's a $100 billion deal. And if you ask me, even though I said, look, Fed rate hike weakness, you got to buy. You put some money to work, and then you see if Coinbase works. Because if Coinbase is one of those deals that's too big, then I think it's good. When I say too big, there's going to be too much supply. It could hurt the market. So put some money to work here, and then see what happens Wednesday if the direct listing works. I think that when I said I want to be paid in Bitcoin, I'm a huge believer in Bitcoin. I think that it's the alternative fiat currency. And one of the things that really bugs me is gold has stopped functioning as a store of value. And in its place, even though I always thought it would, in its place is crypto. So I have said that instead of having 10% of your money in gold, I'm cutting it back to 5% and 5% crypto. So if I'm going to get paid in crypto, it's going to be able to get to my 5% threshold that I want.
Now, we talked about Chipotle's reopening play. I want to circle to Uber because Uber's bookings are up, and they repeated the 2021 adjusted profit goal. And Jim, you and I personally have talked about this, and I've expressed my skeptical feelings about this goal being met, but it's still on track despite this pandemic. So I have to wonder, Jim, about the Uber Eats push.
Here's what Uber's doing that we cannot forget, okay? What Uber's doing, and I just love this, is they've got, they're a great hedge on everything. Because what do they have? I mean, I think it should be flying here. What do they have? Well, if the economy's open, they're going to have a shortage of drivers. That's how good it is. People want to go out. People want to use Uber. They don't have enough cars even. I mean, so they don't. I mean, like there's like a car shortage as it is because of the chips. What they really have is a duopoly on, because it really is Lyft and Uber. And then, I mean, that's what happened. I mean, everybody else kind of went under. And then they made this great acquisition of Drizzly, which makes it so that Uber Eats is now a way to be able to get fine liquor along with your dinner. How smart is that? And I think that the stock goes higher. I know that it sounds like that I'm just uber bullish in so many stocks going higher, but some of these stocks have really been kept back, and Uber's one of them, and I really like it.
And you were tweeting this morning and last night, Jim, about heading into earnings season and how prepared we are. So I want to take this opportunity to kind of take a step back and ask, with the reopening in play, what do you want investors and our members over at Action Alerts Plus to listen in for during companies' calls and earnings releases?
Well, I mean, look, we're gonna have to discount a huge amount of talk about inflation. Okay, huge amount of talk. And I think that we all have to be worried about that, because I think that some people are going to say, no, it's real. And others are going to say, that, look, it is temporal and the Fed is right. So we have to take that off the table. We want to see, because remember, we have bank earnings this week. We want to see whether they've really been impacted by the fact that we have a little bit more movement in the curve, and whether it matters. I think it's not going to matter as much as people think, which is one of the reasons why we sold JP Morgan. What we want to focus on are banks that have a structure that is changing. And that's why we still long Wells Fargo. We're not long Wells Fargo for the yield curve. We're long Wells Fargo for what Charlie Sharp's doing. So I'm a little concerned. We sold our Goldman. We sold our JP Morgan because we think that those stocks reflect too much in the way of short term, meaning that Powell's going to have to raise rates. I'm not buying that. I'm not buying that. So I'm okay. I think that you want to trim back the banks.
All right, and with that, we're going to head over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. Come join us over there. I'm Catherine Ross, and we'll see you tomorrow.